It's always difficult to talk about Asia Pacific as a whole because there's so many different markets. One area that we've seen a lot of investment, and I think will continue to, is in TMT, but largely focused more on the developed markets, right? So we saw this in Australia with a couple of very large data center deals, same with Southeast Asia. I think a consumer and healthcare are also benefiting from investment. And to some extent, and you see this in China, industrials played a big role there, where there's a shift back to more of the kind of traditional bread and butter PE type investments.
I see here that you see the rise of zombie funds. I'm curious, what is a zombie fund and why are they rising?
Yeah, so it's an interesting phenomenon. What's happening with fundraising in Asia Pacific private equity is it's getting very concentrated. So a lot of the LPs are kind of putting more money into fewer funds. And so it's getting concentrated into the big names, the kind of recognized brands. What that means is there are a lot of mid-market or small cap funds that maybe are seeing less hope for raising their next fund. If they're sitting on a few portfolio assets and they don't see a lot of hope for raising their next fund, there's a little less incentive for them to go out and sell it. They might hold it and try to maximize the value they'll get out of that fund, or wait a year or two until fundraising environment is better and then go out and sell it to kind of show those returns to help them with their fundraising. That means there could be a lot of these kind of zombie funds that aren't really being very active but are sitting on their existing portfolios for some time.
Sam, listen, if this does come to pass, right, what you're hoping or what you're seeing will happen this year, rates continue coming down. A couple of good things happen, right? One, obviously, we're going to probably see more exits, right? And it's likely to be easier to raise money as well. On the exits, what should we be watching out for? What types of deals are likely to exit within this year?
Yeah. The two, I guess, factors that have reduced exits, one has been higher interest rates. The other has been kind of high exit valuation expectations. Now, we have seen the multiples on exits coming down. In fact, I think it's down to about 10.7 times EV/EBITDA. So that should help on the exits. What we have seen, and what's been a bright spot and should be going forward, is actually exits into corporates. So in this environment where private equity are a little more skittish buying from each other or skeptical of the broader macro environment, there's a bit more time for them to negotiate with the strategic buyers. Oftentimes, those processes take a little bit longer. They need to do more due diligence. They've got longer internal processes. And so we've seen a lot of exits, particularly to cross-border corporate buyers. And I think that could kind of lead the way on the resurgence of private equity exits.
So this is essentially trade sales. What about IPOs, though, that kind of exit?
I mean, IPOs historically have never been the most favored exit for private equity. It takes a lot of time and resources to run an IPO. You don't have control over the price, ultimately. The market does, and it takes some time for you to exit. And quite frankly, the IPO markets have not been that productive for private equity historically. Some of that might come back, and I think we've seen that particularly in India as an exit route for PE. Okay. But that being said, I don't necessarily see that being a big venue for PE exits.
Gotcha.